Welcome to my channel and this video on tips. As we are all aware that inflation is shooting through the roof. Hereby we are going to discuss an investment vehicle to counter inflation called tips. In this video we shall cover what are tips, benefits and risks, factors influencing tips funds, 3 prominent tips funds. But before we proceed, let me spell out the disclaimer. Kindly note that I am not a certified advisor or portfolio manager. This video is not financial or investment or tax advice, but for information purpose only. Investment products discussed are for illustrative purpose only. It should not be construed as a buy, sell or transaction recommendation. Viewers should do their own due diligence. With disclaimer being ticked off, let's dive inside. As you can see on this chart, inflation is at all-time high. So what are tips? Tips are Treasury Inflation Protected securities. The principal increases with inflation and decreases with deflation based on CPI. At maturity you receive higher of the two principals, original or adjusted. Tips can be a good investment choice when inflation is running high, since they adjust payments when interest rates rise, whereas conventional bonds don't. This is usually a good strategy for short-term investing, but stocks and other investments may offer better long-term returns. Now let's discuss the benefits and risks associated with tips investment. One of the key benefits as discussed is protection of your funds against inflationary erosion. It's also important as an investor to understand the risks. Risk number 1 is price of tips funds fluctuates, potential loss if sold before maturity. While the price of a tips bond will fluctuate between the time when it is issued and the date at which it matures, a person who holds until maturity isn't affected by these price movements. However, this moderate level of volatility does have the potential to become an issue if a person sells a bond prior to its maturity date. In this case, they are guaranteed to receive the bond's par value since its market price could be more or less than par at the time of the sale. Risk number 2 is CPI data doesn't always track the inflation correctly. There is a chance that the element of inflation protection in the bonds will be insufficient to protect that investor's true purchasing power. Risk number 3 is deflationary environment. In this case, investors would likely sell tips, driving prices down since there would be no need for inflation protection. This occurred during the depths of the financial crisis of 2008, when fears of a worldwide financial meltdown raised the possibility of deflation and led to a sharp decline in the prices of tips in the autumn of that year. There are 2 key factors influencing tips fund. Factor number 1 is interest rate changes. Tips prices respond to changes in interest rates, similar to other bonds. Conventional bonds have the expectation for future inflation rates built into their yields. Tips respond to changes in the real interest rates, current interest rates minus inflation rates. 0.8. Factor number 2 is inflation expectations. Changing expectations of future inflation are often the primary drivers of demand for tips. The spread between conventional U.S. Treasury bonds and tips can mostly be attributed to the expected inflation rate. 3 prominent tips funds. Based upon maturity period. Our first fund is a short-term tips with less interest rate risk, trading with ticker symbol VTIP. The fund seeks to track the Barclays Capital U.S. Treasury Inflation Protected Securities, TIPS, 0 to 5 years index. The ETF has a weighted average maturity of 2.8 years. Expense ratio of 0.05%. Our first, slightly longer than VTIP and more popular, is SCHP. Seeks to track the Barclays Capital U.S. Treasury Inflation Protected Securities, TIPS, index. The ETF has a weighted average maturity of 8.2 year. Expense ratio of 0.05%. Investors seeking long-term tips can use this fund. LTPZ. Weighted average maturity of 23.8 years. The fund seeks to track the BofA Merrill Lynch 15+ year US inflation-linked Treasury Index. Expense ratio of 0.20%.